And the end of all that legal jargon and the end of that music means we are ready for another episode of Trade Masters. Now, listen, Trade Masters is a show where two expert traders come head to head, and I'm very happy because my portfolio is down this week, gentlemen. I'm very happy to have two expert technicians. I like to refer to them as pure technicians. They let the chart do the talking because there's all kinds of macro nonsense, and they go head to head and they bring 5 picks every week. They can be anything: short term, cash flow, long term, bullish, bearish. Interested to see what the gentlemen bring tonight. And we have our defending champ coming back, Tyler Craig. How are you doing tonight, Tyler?
Good, Mark. I'm excited. Got some good picks. Ready to have some fun.
Yeah, it's a choppy market, isn't it? It is a choppy, messy market right now. So I'm really excited to see what you have for us. And then for the first time on Trade Masters, but no stranger to tackle trading, Frank Martin, who hosts the onboarding session for tackle trading every week on this YouTube channel here at Tackle Trading. Frank, I am very excited to have you on.
I'm very excited. Are you kidding me? People have been ducking me for a long time, so I'm coming at you, Ty.
I like to joke that this is the gladiator arena. Frank looks like a gladiator, Tyler. He looks like a gladiator. You look like the Roman prince up in the stand cheering him on.
Well, we know how that usually goes.
I'm hoping, let's see, who got knifed in the side? Russell Crowe's the one who got knifed in the side before the fight, right?
Yes.
Under this analogy, it doesn't end well for you, Tyler. So
it ends poorly for both of us for whatever that's worth.
But one of you have to win. And listen, I need some good picks out of you. I have no doubt. I'm very happy to have you on. Tyler is defending champ. You get to decide who goes first.
Frank, lead it off, man. I'll be your hands. You lead me and I'll.
Ooh, all right. You letting me go first. All right. Well, listen, I got to live up to my name and my reputation. So, of course, my first one's going to be a breakout, Mark, and that is going to be on CARR, CARR. I think that maybe I can get Mark to sign off on these guys here. What I like about these guys, number one, long consolidation. Right, we've been very, very much in a range, very clear floor.
Weekly candlestick chart on this, Tyler.
Yeah, so even kind of prettier on the weekly. I guess depends on how you like to look at things, but a nice consolidation. We've held up relative, because like I said, it's kind of been a choppy market. We've held up relatively nice, right? Certainly down, which is a good thing, right? We want time to cook. And this week on this breakout candidate, at least, we've got that time to cook. So I'm looking for just nothing fancy, nothing crazy, just a clean break through that resistance. Ideally, if I get my way, we will kind of bottom out about where we are, because that would allow me to get my stop loss below what would in that scenario develop as a pivot. Right now, we might pull back a little bit more, and that breakout would still be heck, as long as it stays in this range. If it's 3 months from now, it'd still be a breakout, right? But in the short term, going into the very near future, I like it to establish a little bit of a low here, taking another run at that resistance. For me, this is an easy target too. I don't know about you, Ty, but I think as far as high flyers go, the easiest target setting for me is something that's been in a range for an extended period of time. I would expect if we break out of that range, we can expect a move of that range, if that makes sense. And so that would put us, we were trading between about 36 and 42, right? So about a $6 range. So setting a target price in that general ballpark of $48 or so would be kind of where I would be shooting for with this breakout.
All right, so let's say the market sells off the next little while and then makes another run at it. All of the same analysis would apply here, right? Multi-month breakout.
Oh, yeah.
All right. So what is our specific entry here? Are we getting in? I mean, how would you advise to enter?
Well, I would advise to trade all of your breakouts the same. What I mean by that, have very clear definitions, 10% of an ATR above resistance, 1 day close. Now, my rule is I want to see it close above resistance and follow through at 10% of an ATR. So I can't go in and set up an order on a breakout. right? Something like this, I can't go in and set in my order because I need to see the actual close and the follow through. So for me, that would be my rule. Now, other traders are going to have, you might be 10% of an ATR above resistance if you're aggressive. You might be 25 to 50% of an ATR if you're somewhere in the middle. As it is right now, and there's no real way we could maybe look to maybe scale into half the trade on the pullback and the other half on the breakout. Maybe if we get a little deeper pullback, we could have that conversation. I don't know where my entry would be. I just know that I would call this a breakout if we close above resistance, and I would call it confirmation if we took that high out by 10% of an ATR.
Okay, gotcha. No, listen, and listen, even, and I know traders, like you're feeling maybe some bearish tones or whatever, but watch lists are amazing things, and multi-month consolidation patterns that break out with a very clean trigger, right? If this does break out. And I like your entry. I like the wait for a close, next day confirmation on this. Definitely going on my watch list. All right, Tyler, defending champ, what you got for us round one?
Okay. This market has been tough for swing trades. So in a situation like this, little pro tip, I either lean more on higher probability cash flow trades because I don't want to get chopped up. I feel like I get chopped up swing trading in an environment like this. So that's where my head's at for these. I have 2 bull trades today. I'll just go ahead and talk my book here. I'm going to have 2 bull trades, and I'm actually going to have 3 bear trades. I've never had 3 bear trades on a TradeMaster, which says something about market conditions right now. But I'm going to go with a cash flow play first. And one area that has not gotten beaten up as much here recently that is acting defensively is telecom. So I was taking a look at my watch list, trying to find something. I don't usually do directional trades in Verizon, but I like how this is shaping up, and I think we can build a cash flow play. You take a look at a day like today, it's up 10 cents. The rest of the market gets beaten, especially tech. And I feel like if this continues to play defense and just kind of holds firm, I can get a decent cash flow play for the next month. I'm trying not to go overly fancy on the options and over rely on that. But from a charting perspective, I like how neutral this is, quite honestly. It's just going sideways. I like how it's gotten back above the 50 and 20-day moving average. I don't want to over rely on those in a trading range because moving averages really aren't that significant in a trading range. But I do think it's worth noting that we popped back above both of them. So in the short run, you've got a little bit of strength, a little bit of momentum. And this is maybe itching to break out above 57.5. Now, if I'm trying to craft a trade around this, I usually will do something like a poor boys covered call because you can get some pretty good returns. If you try to sell naked put on Verizon, you don't get paid much. And so I feel like to make the numbers attractive, I went the poor boys covered call route. And so what I did is I went to, I want to sell a 1 month covered call. It's just a matter of what do I buy to allow me to sell the call against it. And so, Mark, I was looking at selling the 57.50 covered call for April. It's about a 40 delta. So tackle 25 rules, pretty much by the guidelines. And then to make the ROI pretty attractive, I'm not going to go out 6 months. I'm just going to go out 1 extra month and buy an in-the-money call, which will effectively, make this not a naked call, but a poor boys covered call. So I was just looking at buying which one was it? The May 52.50. Got an 88 delta. So this in-the-money call is going to act as my stock substitute, and then I'm going to sell the call against it. It's only a $4 trade. Okay, if I did a covered call, it'd be about a $57 trade. What I like about it is when I look at the risk graph looks just like a covered call. If we just stay here, I make $47. I just get to capture that call premium. It's about a 10% return on my cost. It's actually a little more than that. If Verizon goes up above 57.50, I make about $90, which is more of a 20% return. So I got a 10 to 20% return on a boring telecom stock that's completely uncorrelated with all the crap going on in the rest of the market. That's the type of bullish trade that I would feel more comfortable with in this type of environment.
All right, since our higher return is, requires a little upward price movement, would you wait until it breaks out of that resistance level before instituting the trade?
You could. I think if I'm looking at this, here's the irony. Breaking out is going above today's high. So if we just say, I want an up candle to go above a prior day's high to show that this upward momentum is continuing, that's a prerequisite for me on any bullish trade. So it just so happens that breaking today's high is also breaking out. So yes.
All right. Out of curiosity, we can throw me, because that 54 support level goes way back.
Mm-hmm.
I mean, it's been a pretty good support level several times at several different points.
Yep.
Outside of the COVID collapse, when everything just sunk. I mean, what am I getting for those 55s? Out of curiosity.
So if you want to sell, if you don't want to go the poor boys route and you want to go a little higher probability, I don't know if you're gonna be able to do any Aprils here, Mark. 40 cents. That's actually not terrible. You might have to go to May at this point, to be honest, but about a 5% return if you do April, which, to be fair, for something like Verizon with a pretty good probability is not terrible. You go to May, you're getting more of a buck. The May one would make a little more sense to me. You're more like a 10% return going to May. So,
all right.
Yep.
Good deal. Good deal. All right. So I got a joke for you. We're going to have, each of you are going to have a joke later on the show. My daughter picked out this joke. I gave her a bunch of candidates. This was her favorite. Nice classic dad joke out there for you to share with your kids. What do you call cheese that isn't yours?
Nacho cheese.
Nacho cheese.
Very
My
nice.
daughter loved that one.
I can respect that. I've got the same sense of humor as Pookie.
So I got maybe a more irreverent one coming up here in a second. All right, round two. Frank, what do you got for us?
Good deal. Just a quick hop in really quick, Mark, before I go to the next round. Eli sent us a $4.99 super chat, just asked us a quick question, and thank you for that, Eli. And he just asked about the significance of the different EMAs and the 200 EMA. So I want to hit that for Eli really quick. Think about it like this, Eli. The 200-day moving average, kind of a year's worth of trend. The 50-day moving average, about a quarter. Now, those are pretty commonly used by virtually all traders. Would you agree, Mark and Tyler?
Yes.
Yep.
So they're kind of the trend lines, right? Or not the trend lines, but the trend moving averages. Then you've got your 20, which is what we use as the 20. All of those are simple moving averages, just simply meaning it's the average price over that number of candles. And then we also use the 9 EMA. That 9 EMA is an exponential moving average, meaning it's weighted to today. So today is more important than yesterday, which was more important than the day before. And so these shorter term moving averages are more, for me at least, more for momentum, bouncing off of the 9, pull back into the 20, see if there's separation. So they're really, for me, they're more momentum averages than, say, the 200, which is, hey, something pulls back to the 200, it's going to catch my attention. So that's kind of my take on it. Anything you guys would like to add?
No, and traders will do. I mean, we put up a 3-year SPY chart, weekly candlesticks, and different traders. Was it Eli that asked the question?
Yes, sir.
Yeah. And like highlight that, like little, like the pivot in 2018. A lot of traders will develop trading systems of looking to get in at certain points. And so, like, after a big sell-off, for example, when the market spins out of control, traders will use different moving averages, and that's nice on the 20, as like, all right, I have a trending market, I'm going to wait for a pullback, like the one you had in July, August. I think it was August, towards the end of August, came down to the 20 weekly. A lot of traders will develop trading systems to look to get in to markets on pullbacks based on some of these longer moving averages. Some short-term traders will develop systems like pulling back to daily moving averages. And then of course you have day trading. So they're a tool. I love moving averages. I do almost everything I do around moving averages of some kind, but they're a tool in which you can use to help develop your own trading system, your own entry signals, and so forth.
So, right. And thank you for that, Eli. And hopefully that gives you an answer to that question, my friend. And I threw another answer in the chat, just kind of on the crossovers themselves. All right.
What do you got first, round two?
All right, I'm going to go with a bear because I know Tyler's got more bears than me, and I don't want him to steal my thunder. So I'm going to go with Coop, C-O-U-P. Good old-fashioned bearish breakdown here on Coupa Software. Now, their options are not great, so this would probably be an easier short than trying to build an option trade on, at least in my personal opinion. But what I love about these guys, you could probably clearly see it, right? This is just an upside down Frank chart, right? Now, what's really cool about them, Mark, is they plummeted through their 50 weekly
I already looked at it.
So last week, I mean, that's not a great sign. We've been kind of dancing around a little bit, kissed that 9 yesterday, got pushed back down here today. Now, this is a pretty respectable support level, right? And so I want to make sure I take this support zone out. It's very difficult. Again, if it was a deeper retracement, maybe we could talk about the scaling in, but I don't believe we're going to have that risk to reward, because if this support holds, I mean, how surprised should we be? I mean, it's held time and time again, right? History says it's a good place to buy, right? That's why it's a bearish signal if that floor gives out, but really only if that floor gives out. What I like about these guys, beyond the clean setup and the breakdown itself, there's just nothing to catch it for the shorter term. I would say until we get into that 185 to 190 range, not really any old support that would, hey, anything can catch it, right? But I don't see anything that, oh yeah, that's a great place to buy in. And so there's a pretty good window for us to work with. And when I see something like this, and this is true for the bullish breakouts too, probably even more so because usually I'm a bull. So, but it's that window is what I'm looking to fill, right? And so if I break down, that can be an opportunity from an entry perspective. If it leaves me behind, if it breaks down and just tanks, and my risk reward is just not any good, I still expect that window to be filled. So then I'll look for a retracement or a little consolidation for that next signal to the downside. But as it is right now, again, my rules would say I need to close below that support level. I would call that the low that we set up here, late, last week. So to give us an actual number, what is that? 247. I would say below that would be the break, plus whatever your personal rules would be, working at a target into the 190, 185 range.
Now, I'm looking at the options to put together maybe a bear put spread. I mean, they're not great by any stretch of the imagination.
Mm-hmm. Yeah, that's one downside here. It is, I mean, you could probably do it if you really wanted to, but I kind of have a philosophy that if the options aren't good, don't trade them. You can always, there's no rule that says you can't go short 7 shares of the stock if that's what you can do within your position, within your account.
And talk about that, because so often we're accustomed to, like, you got to do things in 100 share blocks, right? 100 share blocks.
Yeah, and it's understandable, especially if you're new. You just kind of wrap your mind around. And hey, all things being equal, probably would like to. So we always have the flexibility of, easy covered calls, right? Easy protective puts. But especially here in the States nowadays, I mean, with these $0 commissions, it's been a year and a half since that happened, something like that. I still don't think people fully appreciate it, because for a long time we couldn't talk really about shorting 4 shares of Coop, right? Because it was going to cost us probably, for the average trader, around $7 to get in, $7 to get out. So cost of doing business, you really had no upside, you just had downside. But now, at least here in the States, with all these $0 commissions on stocks and ETFs, we no longer have that worry or concern or excuse, if you want to call it that. So let's say we take a 5 share thing here, right? Not a huge chunk of risk by any stretch of the imagination. Stop loss would need to be above the breakout point, probably above the 9 is probably where I would want it. Potentially, you could go above that high from yesterday too. So just to give me a rough number, that'd be a stop around 266. Right, 266, is that right? Yeah, 266. Yeah. So I'd be risking about $20 a share here. So even 5 shares, that's $100 risk. But if I lose, I lose, right? If I'm not willing to take that risk, what am I doing taking any trade on it, right? if I'm right, or even if I'm kind of right, maybe I, make it halfway to my target. It's not target price or bust necessarily. Those 5 shares are going to add up, right? I mean, say we drop $50, right? And that's where we establish new level of support. Am I going to get rich doing that? Not on that one trade, right? By any stretch of the imagination, but I'm trading within my system, within my position size. No, it doesn't have to be on Coop, obviously, but there's really no reason why we can't do that, especially nowadays. For a long time, it was something we didn't really even think about for years, right? Mark, how many times do we talk about trading 10 shares of anything?
Well, that's the thing. Had you shorted 5 shares of Coop when it broke the 200, you'd be up $250 right now. About.
Yeah. So I mean, it can still be a good trade, right? It's the dollar might not be the most exciting to you, but all of a sudden, like Mark says, I mean, I wish I had those dollars. I wish I shorted it when it broke the 200-day moving average.
All right. Good deal. Clean. Hey, listen, Frank brings a breakout and a breakdown, living up to his name. All right, Tyler, round 2. What do you got for us?
All right, I'll follow you with the Bears. Mine, I'm also going to be in the software space, actually. No, I'll do that. Well, let's do it now. All right, so Snowflake. This looks like garbage. This is the weekly chart, and you can see that it is testing its all-time low. It IPO'd last year. It's only been around for about 6 months. Ran from 200 to 400. Now it's back to 200, and there is nothing beneath this. So weekly chart, starting a downtrend, getting ready to break into new all-time lows. Daily chart,
literally nothing but clear air underneath.
Yep.
Correct. And this, from a valuation perspective, not to betray your lead-in with us being pure technicians, Snowflake is very overvalued, right? So this is a company that has been bid up aggressively since its IPO and really doesn't have the chops to back it up, quite frankly. So if you look, it's just completely unwound. It's been in a downtrend for months and months and months. It's in the tech sector, which is out of favor right now. It's a growth stock, which is out of favor right now. There's just not much going for this. It had really heavy volume after earnings. Even after dropping a couple $100 off the highs, they still slammed it after earnings. Mark, this has not even touched the 20 EMA since.
No, every time it's came up to that 9 EMA, it's got slapped down every time, right?
Yep. Down 5% today. And this is about as good a bear setup as I can find, to be quite honest. So I like this on a trigger below 208.55 was the low back here. Today's low was 208.60. You're pretty much there. You pretty much take out today's low. That's your trigger. I think potential stop over the 9 EMA. If you want to give it a little bit of room. Actually, I don't think you need to be honest. I'd probably go yesterday's high as the stop. So you're risking, 230 to 208. You're risking, $22 or so. This has an ATR of $17. So it drops a couple ATRs and you've made double your risk. And my initial target would just be 2 times whatever my risk is. So from a strategy perspective, I could echo everything we just said about Coop. You could short the stock. I believe you can borrow shares. If you can't, there are options available. Keep in mind, some of these more volatile, $200, $300 software stocks, the bid-ask spreads are going to be a little bit wider. This one is better than Coupa software. It has a little more volume. You could probably make something work. Mark, I would do a bear put spread. I mean, I don't want to buy a put outright because they're really expensive. So something like buying a 200, buy the 200, put, sell the 190, paying $4 for that out to May. You can go a little further out of the money if you wanted to make it cheaper, but that would be the type of trade I would set up around this if it wasn't shorting stock.
I mean, it's very, very seldom that you get a pretty IPO breakdown setup like that. And I love how you sold off after earnings and then you've had that couple weeks to take off, right? Came up, creates a really nice
and if you own this, you got to be nervous right now. You're on pins and needles.
Oh, yeah.
Oh my gosh, come on, man. Yeah.
I mean, seriously, if you own this right now, you're like, this is going to drop to 160.
This is not pretty. Yeah.
I mean, you feel like the rug is about to really seriously, and once again, the ATR, I mean, 160 is what? 3 ATRs?
$40. I mean, 2.5 ATRs even. Like, yeah, this thing moves. Yeah.
You know, Tyler, my ex and I had a very amicable divorce.
Mm-hmm.
I know this because when I posted on Facebook, I'm getting a divorce. She was the first one to like it. Now, is that a joke or is that a real story?
Listen, I know, Mark, that's a real story.
Frank, round 3, what you got for us?
All right. Well, I am going to try to butter up to Mark a little bit. And I want to take a look at CCJ. These are a dirty, sexy money candidate over on the Tackle 25. Been cooking pretty well, right? Pretty deep pullback. So right now, I don't think you've got a traditional for the most of what I do. I'm very much a directional swing trader, probably by most people's standards. So a little bit difficult from that point of view. But I wanted to see if I could talk you into maybe starting to look at selling naked puts, since this is a candidate on the dirty sexy money list, something I'm interested in. I was thinking maybe as we get this pullback, maybe a boomerang style to get involved with this could be on the table now that I finally got a little bit of a pullback. So I would like, since you are the master of selling the naked puts, I like the idea. Now I want you to help me figure out what I should actually sell or how much further I need to drop before I get in.
I pull up a weekly chart. This is how I do it. Like, because technical analysis on CCJ, good luck with it, right? Other than finding broad trends, it can get really, really messy.
Right.
I like to estimate on a company that I really like in a space I really like, which CCJ fits the bill on both. I like to estimate where that 20 weekly might be when I sell that put. So like, let's say I'm going out to May. So what has the 20 weekly been climbing? About every week on estimate. This is how I go through the process here.
Well, you're 322. You go back to 222, and it was 12. So maybe a buck 40 over a month.
Yeah, so I'm going to comfortably be in the 15 range easily by May. Might even, depending on the ascent, let's say it calms down and trades sideways, the rate of ascent is going to calm down by May on 20, but you're going to be in that 1560. And so I use the 20 weekly, and this kind of ties into how I do it to that question we had earlier. I use the 20 weekly as a gauge on something I'm not in, but I really would like to, as a level where I'm comfortable. I've done this on FCX for months and months and months. They always expire worthless, but it's the same gauge because I want a deeper pullback and I want a logical place where price might stop. That 20 weekly is a place where it seems price stops constantly. Go look at a Microsoft chart of the year. See how many times at the 20 weekly nasty pullback just all of a sudden just stops at the 20 weekly all the time. I mean, you don't have to go. I mean, just look back over the last 3 years of Microsoft, how many times pullbacks to that 20 weekly, that red line, have just stopped? Happens a lot on some of the more popular stocks. Even the choppy price action, that 20 weekly held pretty good. So going back to CCJ, I know I'm comfortable at 15 easy. Could probably even be greedy on 16 if I wanted to. So I like that 15 or 16 on that, with the 20 weekly potentially acting as support in a hotter market. I go out to May. I'm about 57, 58 days out now. 58 days out, and I'm getting decent premiums.
Good.
For both of those.
Forget Mark, Frank. You got me interested.
There you go. Yeah. I appreciate it. And so for me, Mark, because I know you and the 20 and your thoughts on that, I appreciate you kind of sharing kind of how you estimate where it'll be. That would also kind of line up. The 15 lines up pretty nicely with the 50 on the daily as well. So is this one of those scenarios where getting the bigger credit because you've got the 20 anticipated at that 15. That's where the 50-day moving average is approximately. Getting the bigger credit at the cost of the little extra cushion. Is this one of those scenarios where maybe that's the way we side? Or do we say, you know what, 14 still a good credit, obviously not as good as 15. Let's get that little extra wiggle room and go that route.
I don't go the extra. I only sell naked puts to own. I don't own CCJ. I've owned it several times in this run. Got called out. I've sold naked puts. They've expired worthless. So I'm not afraid. A lot of it comes down to how much available cash do I have overall in my portfolio. Am I over leveraged? Well, then I'm probably not doing anything.
Right. And that's a good idea.
Am I even and I don't feel comfortable? I probably still shouldn't do anything. But if I have a little bit of cash to spend, if I've used the last 6 weeks of all the volatility to take out some of the risk, I'm going to go more aggressive on a stock I have. But a lot of it is going to depend on where I'm at in my trading. Am I feeling too much pressure? Am I not feeling pressure? I like the 15 a lot here. 16 if more aggressive. Also, you can look to buy the stock if you get a reversal signal. There's a lot of ways I like this.
Sure. So,
well, which one interests you the most, Frank? I mean, Tyler?
I mean, look, your ROI on that 15 is 50%. I mean, like, forget it. You could go down. I was even looking at 13. You could sell the 13 put and get an ROI of about 25%.
Yeah, so, and if you wanted to be real conservative, and there's nothing wrong with being real conservative in this environment.
Nope.
I mean, we haven't had a market spin out day. I mean, it's felt like a lot of pressure, especially if you're in the underbelly. I mean, you had a lot of SPAC stocks down 10, 12, 15% today.
Yeah.
So you're different portfolios. So if you wanted to be a little more conservative in this environment, and that 13 is a real conservative, probably not a bad way to go.
Yeah, I think you got lots of choices on this one. It's a good pick.
So, all right, Tyler, round 3.
Okay, I will go with another bear. I found a lot more bears than bulls. Let's go with DoorDash.
You just hate IPOs, don't you?
Hey, I follow what I do what the market tells me to do, and right now it's telling you not to like IPOs. Which, by the way, I mean, doesn't that go along with what's the theme, right? They've been hating SPACs, they've been hating growth stocks, they've been hating tech stocks.
This SPAC IPOs is getting slaughtered lately. The market story does not tell you how bad these. I mean, just to give you an idea, pull up OUST. Go pull up FUBO, FUBO. I mean, there's a lot. That's not bad short either, actually, right there.
Nope. Well, don't you feel like the ARK ETF could be kind of your proxy for the whole growth momentum space too, right?
Yeah, and so this whole growth momentum, non-profitability storylines, like they're getting killed. So Dash fits that bill.
Yep. So what? It's actually a similar pitch to Snowflake. It's an IPO'd last year, right? I think my chart's correct. Yeah.
Yep.
So it's been around for 4 months. You got one earnings announcement under the belt. They didn't like it. It's sold off ever since. It is at an all-time low. It already took out its low from last year. And today, I would call this a descending triangle. Little descending triangle here. And again, look how the 9 EMA has been providing pretty stiff resistance along the way. So support break today, and it's got nothing underneath. So I mean, you could say, well, what if it's a false breakdown? Look, I mean, anything could be a fake out, but that's why you have a stop loss. I mean, so if you think the trend continues and you think this area continues to be out of favor, I don't think you could find much better than something at an all-time low in a weak sector and a nice little risk reward. I would probably put the stop above the 9 EMA or yesterday's high. And, because it does kind of chop. Right. And so I'd say, look, if you want to break out above yesterday's high, fine, I'll get stopped. But otherwise, I'm assuming this works its way lower.
No, and it took that. I mean, this looks like Snowflake's chart tomorrow or the next day, where you took a couple weeks off and then just finally it can't. I mean, you would have to have a market euphoric Oh my gosh, everything's exciting. Another thing about DoorDash, when it IPO'd, that wasn't the price that it IPO'd at. That was the price it was bid up, doubled at. It IPO'd at like 90, 95 bucks, got bid way up. Yeah, it's a beautiful chart. It and Snowflake. I like these IPO shorts a lot.
Yeah, both very clean.
And if you wanted something cheaper, again, bear puts. I think this has the same issue as Snowflake, where it's actually better.
The options are not too bad,
they're
actually.
Not bad. Yeah, but bear put spreads. I mean, buying puts, they're expensive on a newer company, so you pay a lot. You make a lot if you're right on the puts, but if it goes against you, you lose pretty quick. So bear puts is I think safer, easier way to play it.
No, the options are not too bad on old DoorDash.
Yep.
Are not too bad. No, I like those IPOs a lot. All right, here's my final joke. Ole and Lena were celebrating their 25th anniversary. After the guests left, after they had this beautiful party, Lena looked at Ole and punched him in the shoulder. That's for 25 years of bad sex. Ole sat back, rubbed his shoulder, thought about it for a minute, and then punched Lena back in the shoulder. That's for knowing the difference.
Was that a courtesy chuckle? I liked Pookie's better.
What age did they get married?
The married man.
What age did they get married? I'm just curious.
I don't know. Listen, you're going to get the details. Listen.
The backstory. They had
Frankie,
names.
round 4.
All right, round 4.
Oh, before we get going, I want to highlight, just spend a second. We do a lot of great picks. We do a lot of great everything at Tackle Trading. We got a new product, and we pull it up real quick, Tyler, on tackletrading.com. It's called the Huddle. Now, the Huddle brings you the 5 biggest news stories of the day. Matt and Tim over there at Tackle Trading, they put in a lot of work discussing, thinking, writing, discussing what is important to the market today. Because so much news out there is fluff. Matt and Tim break down the 5 biggest stories impacting the market every day, released, I believe now, on audio version along with a written version every day. If you go down, you'll see the written version. Scroll down the screen, but it's a free product. You don't have to be a pro member at Tackle Trading. It's a free product every day. So if you just want expert analysis and a breakdown of really what matters to the market, check out the Huddle every day on tackletrading.com.
Yeah, that's really cool. It's really cool. Well, everyone knows I'm not a big news guy, right? I don't like to get caught up in that. So that's nice because I can just listen to Matt and Tim tell me about it. So it's very cool.
I mean, once again, pure technicians that just want to have a sense of what's going on. It's a couple minutes. Catch up on everything that's going on in the market.
Yeah, really quick, easy, and a lot of fun. So, yeah, definitely check that out for sure. That's pretty cool. All right, we're on number 4, right?
We're on number 4.
All right, so I'm debating because I got one that I really like and one that I don't like as much as the other one. Right, that doesn't mean necessarily anything. I'm debating if I want to finish strong, but I want to talk about this one right now. I can't wait any longer, and that's BAM, BAM, Brookfield Asset Management. And could you zoom back just a little bit, Tyler? Just zoom back in time a little bit, if you would be so kind. So you can kind of see here on Brookfield, we are not only having a nice little high base that's developed over the last week-ish, right? We're also doing that at an all-time high. Now, for whatever it's worth, last time we were pushing into this was right when the market tanked last year with all the COVID stuff, right? So we were pushing at that breakout last year. It's caused a little bit of hesitation here, which is great because we were running really hot into that resistance, bouncing off that 40 and basically running to 45. That was running real hot, definitely needed some time in the cooker. And this week has allowed just that to occur. Nothing crazy, nothing fancy, just a pure breakout here. If this breaks this resistance level, I would certainly call that a bullish signal. We've got a little base that's developed, which is also lining up pretty nicely with that 9 EMA. So I think from a stop loss perspective, getting a little bit below this base that we've put in over the last few days, probably a little bit lower Then 44.74, it looks like, was our low point in there. Not really a whole lot, in my opinion, with these guys. They're not the most volatile. They're certainly not the stock that I would expect to go completely insane, although, you never know, and you never complain if that's what your stock does. But I would expect to target into that $50 range. Might be a little while, might be not a straight shot to 50. I would expect it would probably take a pullback or two to get there, but that'd be a really strong signal, breaking of an all-time high. We're seeing how the buyers and sellers are reacting at this resistance. We've had a week, had a good week, right? A lot of people have been taking profits. We've had a really good reason to take profits on BAM here. Why aren't we? Right. So it shows me that there is interest from the buy side of this. We just need to get through that resistance. I don't want to go first, right? I can't go first. So just a easy breakout. I really like the chart. I love where we're at, both over the last week and how that lines up with that resistance from last year. Easy breakout trade, in my opinion.
I really like the story of this stock, it resulting in price action with the broad market. The two big red candles, when we had that volatility about a month ago, that was the two big SPY days. But we had another follow-up batch, and it had two red candles, but it didn't even break support on those days, bounced nicely off the 50. Real strong relative to the market, seems to me. I mean, obviously if the market tanks, but I like the story of this stock, and I like it for a position trade a lot. REITs are always, I don't know if Brookfield Asset Management's actually a REIT. I think
it'd be financials.
Yeah, no,
right.
I don't think.
Yeah, they're financials, investment managers.
Yeah.
But that's a nice story stock right there, as far as price action. In this market, man, I don't want to try to guess. I want to go with strength. This appears to have some relative strength. It's a nice chart, Frank. I see why you like it.
So yeah, that was probably my favorite of the bunch. And I was going to wait till the last one if I needed to come strong against Tyler, but I couldn't wait any longer. So
no, good chart. It's a very nice chart. Was not on my radar, but that's what we do at Trade Masters, right? Bring stocks, ideas. I like it. Tyler, what do you got first round for it?
Does Frank have a joke before mine?
Oh yeah, round 4 joke, Frank.
Ooh, yeah. I'll throw a joke. All right. Why did the can crusher quit his job?
Why did the can crusher quit his job?
Because it was so depressing.
You and Pookie do have similar humor.
I know we do. I don't know what that says about either one of us.
Nice,
Pookie's what I call my daughter, by the way. All right, Tyler. Don't so depress us here.
I'm gonna go. I'll pivot back to a bull trade. I like this pullback in energy. I think that had the market not sold off, this would have held up stronger. Or yeah, let's leave it at that. This was the best performing sector today. Was even better before the market puked at the end of the day. Could be a gift. It returned back to its breakout point. So I think if I'm going to buy the dip in the market, this is the type of area that I like doing it. And I don't think you need to overthink it. You could go pick an individual company, Exxon, Chevron, Conoco. I actually like just playing XLE straight up. And I like, again, cash flow plays right now over directional plays for me personally. So rather than doing something directional, I prefer selling out of the money puts. And I'm going to go to May. You can sell a May 43 put around an 18 delta. Get about, $76. My margin requirement's 430. Just to get the math, 76 on 430. It's about an 18% return. And if I look at the chart, I like 43. I like 43. If I draw a line at 43, I feel like I got a pretty healthy margin of error. One of the things I like to do is look at how far that is off of the high, not just the current price, but the peak. So for us to go from this peak of 54.37 down to 43, that's about a 20% drop. This could turn into a 20% decline. But quite frankly, if it does, this is an area I don't mind buying, because of the recovery in crude oil and everything. Could set up a good boomerang trade, kind of thinking back to the CCJ logic. And I think the numbers work well. Even though implied volatility has dropped in oil over the last 4 or 5 months, those numbers are still pretty compelling for me. And if you look at the weekly chart, Mark, right now, first of all, that 43 corresponds with some old resistance zones as well as the 20-week moving average. So I think it's a pretty good spot.
If XLE actually hits 43, something really weird happened in the market. So I like that. I like it. And once again, I mean, this is one of the things you learn as traders over the years. There is a time to be aggressive, and there's a time to maybe not go for the biggest return in a given month. Play a little defense, try to cash flow, try to do the best you can to make a little bit of money in a very tough market. Here's Tyler's a swing trader, not a single swing trader pick tonight, and I think that's telling of the mindset. But still, there's still opportunities. I've liked both of the cash flow naked put things in CCJ and XLE sixes. I think they're both really good cash flow trades in this environment. All right,
yeah,
Frank.
I would agree. You got me interested there. I would probably, unlike Tyler, I'd probably go try to pick my poison in energy, but I completely understand the wisdom in just trading the sector itself.
Well, especially too, you know what? Selling May options means like we're at the stage of the earnings cycle where when you start selling options now going out to May, almost every company has earnings between now and May. And so if I'm selling April options, I think I'm fine because most companies don't report before April expiration. You start getting to the point where you're selling May options. Now you have to decide, do I want to hold this into earnings or not? Allowing or using XLE allows me to sidestep that question altogether and just say, I like the sector. I don't have to worry about earnings on an individual company that I know is coming over the next 6 weeks. So I'll just sell puts on this.
Fair enough. And that makes sense. Makes perfect sense. I got no problem with that. So yeah, I'm with you, Mark. I think that's an interesting character for sure.
All right. Final pick, Frank.
Oh, I thought Tyler got a joke.
He's going to tell his joke after his final round.
Okay. So final round for Tyler. All right, I've got a bunch that are all ties for me, so I am going to stick with the energy theme that that Tyler brought up, but I'm going to try to pick a stock myself, and I'm thinking a little more directional. Probably be out before earnings, and for my choice, I'm going to go with Apache or APA Corporation. I'm sorry, APA. And if we could start on the weekly on these guys, Ty, you can kind of see that we've recently broken out, little snapback Cody special on the weekly chart, right? For anyone who doesn't know Cody special, it's just a breakout that kind of quickly retraces back to the breakout point where we look for some upward momentum as confirmation, right? So on the weekly, I really like that we've had that breakout. We've had that drift back to the downside. Now, this is going to be one of those trades that if I'm thinking energy tomorrow, I'm probably much preferring Ty's approach because I think we need to let this weekly candle finish personally. But assuming that this is what our weekly candle roughly looks like as we wind this week down, upward movement above the weekly high would be the signal for me. I would expect to work back towards that resistance level. And because I still think there's room in the space if we get our signal into that 200 week moving average as a secondary target. So going to have to be patient with these guys because I do believe we're going to get better confirmation if this is our weekly candlestick. Right now on the daily chart, if you switch back over there, we've got a lot of stuff, right? We've got the 50 that we're hanging at, but now we've got the falling 9. There's going to be most likely a bit of chop in there, right? Unless the whole sector just goes crazy. So if I can get that development going into next week, this is going to be one of those energy plays that catches my attention from a stock picker's point of view.
No, I mean, I like that play a lot. Apache's one of the energy stocks I'm following. I like both energy plays, and I like your analysis of be patient, let it set up, wait for the setup. If the setup occurs, that's a good quality one. Just a little bit of patience. It's not a trade for tomorrow, as you mentioned. Yep. All right, Tyler. Frank brought 5 picks. It doesn't surprise me that they were great analysis, good technicals, all that. I mean, that was a given, right? You got one last chance to impress.
All right, I'm doing it with another bear. Do you remember when everybody thought that gyms were a thing of the past? Nobody would ever leave their house again. And so Peloton got bid up to the moon, just went bonkers. Well, the whole thing's unwinding right now.
Oh, that's nice.
The whole thing's unwinding right now. And so to put this in context, you look at the weekly chart, Peloton was $17 last March, and it went up to 170. So that's a tenfold increase. And I think it got a little too far out over its skis here. So you're seeing this come back in a little bit, which is being echoed by Zoom and some of the other kind of stay-at-home plays. Those are in the growth areas, and they're just out of favor right now. And I think eventually it'll be a buy, but that ain't right now. So if you look at the weekly chart, you're at kind of a significant weekly resistance pivot. There's not much underneath this. Not until about $70, which is quite a bit away. And the selling has really been relentless the last 6 weeks. And look, the first time you had an attempt to break above a prior week's high, just got smacked in the face, right back down. So I like the relentless selling pressure on the weekly. You look at the daily chart, see a little bit more detail here. I'm going to call this just maybe a low base. Right, just kind of hanging out, basing sideways here. And the 200-day moving average, look at how that's coming in. We tested the 200-day moving average once. We tested the 200-day moving average twice, tested it a third time, and we broke it today. First close below the 200 since this thing took off last March. I think that's telling, and I like this as a short trade. Trigger for me would be under today's low. I think you could stop today's high or stop the pivot high. This is a volatile stock. It does move a fair bit. I mean, it's a $100 stock with almost a $10 ATR, which means it moves on average 10% a day. So this is not Verizon. This is like the exact opposite end of the volatility spectrum. So it does move a fair bit, but look, the chart looks great. I think it speaks for itself. I think a short trade works. If I'm going to use options, it would be a bear put spread for me. Maybe buying the 100 put, selling the 90 put out to May.
It's beautiful.
Well, it's ugly, which means it's beautiful, right?
Which is beautiful. What joke do you got for us, Tyler?
What did the 0 say to the 8? Nice belt.
What did?
Nice belt. See, we were bringing.
You have
today.
one joke, and that's what you brought us. All right, listen, this is tough. I loved the trifecta of logical breakdowns Tyler brought. Dash, Snow, Peloton. Man, it's hard not to like one of those. I love the cash flow plays by both individuals. I love BAM. I love Apache. I love Car Down the Road. I expected a dead vote. First person in chat to get 3 votes is going to be the winner tonight. First time I've ever done that. I really don't know how to logically decide here.
Don't fail me, chat.
So
we're
first
friends.
person to say
chat.
3 votes. 3 votes on what picks you like the best. While you're voting, because it takes a few seconds. So listen, check out the huddle on tackletrading.com. And if you're not a pro member, listen, Frank and Tyler and Tyler, you're not allowed to vote for yourself. Frank and Tyler are 2 individuals who bring us great setups every week as part of our Scouting Report picks. If you haven't been and you want that market guidance, learning how to trade, check out tackletrading.com. Sign up for a 15-day free trial. See what it's all about. We have an amazing community, and we have coaches literally combined. Frank and Tyler have been around the market for 15 years. Almost every coach we have, it seems, has been here a decade or 15. So you have an experienced crew guiding you. Email me at team@tackletrading.com. I'll set you up with a trial. And don't forget to check out the huddle every day. All right, I'm going through the votes. I got 1 vote for Frank. I got 1 vote for Tyler. I got 1 vote for Frank. I got 1 vote for Tyler. And the third vote, who happened to vote right before someone was going to vote for you, Tyler, was Frank. Frank, you're the winner tonight.
Well, thank you.
Well done, Frank.
I'm all right with declaring Ty the winner. We'll call it a tie, Tyler. We'll call it behind closed doors.
Kumbaya, baby. We're all friends.
We're all winners, right? Hey, listen, it's always fun to see somebody else's trade ideas and kind of go through their thought process. So I feel like a winner just getting to hang out with y'all. So I appreciate you having me.
Frank is so nice. Had I won that, Frank, I totally would have sent you packing. But that's why you're a nicer guy than me, Frank.
Yeah. I'm the face, right? You know, you're the heel. Everyone else is a heel, so I got to be the face. Everyone else is mean to each other. So.
Congratulations. Final thoughts, Frank. What are your final thoughts? Send us out.
Ooh, final thoughts. It's a little rougher of a market right now. It absolutely is. I still think you stick with the technicals and trade into strength or weakness, depending on where you are going. When the market gets choppy, it's best to assume it's going to stay choppy for a little bit, right? And kind of usually as a directional trader, I hope I'm wrong when that's the case, but I assume that's going to be the case. That can mean quicker profit taking. That can certainly mean smaller position sizes. I don't think we've seen enough to not want to be involved in the market personally, but I do, it's behaving a little different than it was, right? And we're definitely seeing some chop. So do what you need to do to remain comfortable within that, right? There's nothing wrong. Cash can be a position, but don't let fear keep you from taking your trades. There's lots of ways to go. Tyler makes a great point. Hey, let's start doing some wimpy stuff when it gets a little tougher, right, Tyler? It's a little easier to win and keep in the game. So just don't force the issue, right? And that's always the advice I give everybody. But for me too, it's more useful when the market's chopping a little bit, right? So just continue to trade within your systems. Don't over leverage yourself, but trust your eyes and trust the charts that you're seeing. As you saw, I mean, there's legitimate bulls and bears out there, right? Just from tonight's discussion. So that does lead me to believe there's opportunities on both sides.
Well said. Listen, this is not the last time you two are going to square off. Seriously, I loved the strength picks. I love the weakness picks. I love the cash flow picks. Gave me a lot to think about. I'm sure you gave viewers. Everyone have a wonderful night, and we'll see you next week.
Thanks, team.
And don't forget to check out the huddle tomorrow morning. Tackle Trade.